Hi, I'm Dave Taylor with First Mark Insurance Group. Today, let's talk about why insurance rates go up over time and what you can do about it. So, why do rates go up? Well, there are several reasons. There are reasons that you can control, and there are other reasons outside of your control. Factors you can control include things like the kind of car you drive, as well as what kind of tickets, accidents, and other claims activity is on your record from the past 5 years. The more activity you have on your record, the more you're going to pay for your insurance. I think that part for most people is pretty obvious. The more challenging question is for those who don't have any activity on the records and they still see their premiums go up. So what causes that? Well, there are several factors that fall into this category, but before I explain those, I think it's worth noting that when an insurance company wants to increase their rates, it has to get permission to do so from a governmental agency, the Department of Insurance. They can't just arbitrarily increase rates. They must prove that the increases are justified. Companies will cite numerous factors, but there are a few of the main drivers we are currently seeing. Number one, the repair cost for technology in modern vehicles continues to rise. A bumper that used to cost $500 now has embedded technology and costs over $3,000. Second, medical expense costs continue to soar. This impacts liability premiums, uninsured motorist premiums, as well as the personal injury protection premiums. Third, fraud is also a large cost for carriers. Conservative estimates say that this adds around $250 per year per driver to the cost of insurance. And lastly, one of the biggest causes for increased claims for carriers is the distracted driver epidemic. Not only is this causing the number of accidents to soar, it is also causing an increase in the severity of those accidents. So what can we do to combat these increases? First, let's make sure we keep your record clear of tickets and accidents. Let's also make sure we don't turn in small claims that you could afford to pay out of pocket. Let's make sure you are receiving all the discounts available from the carrier. And lastly, let's make sure your deductibles are at the appropriate level. First Mark can always help you find another carrier, but before we do that, there are a few things you will want to consider. Insurance rates vary from year to year. Odds are, if you find a good carrier and stay with them for several years, your premium totals will be better than bouncing from carrier to carrier every year. If you change carriers every year, you don't establish enough tenure to receive the best rates from the new carriers. Most carriers require at least 3 years at your previous carrier before they offer their best rate. Insurance scores play a big part in your insurance rates, and changing carriers frequently has a negative impact on your score. Switching to a new carrier means new reports and inspections. If the new carrier decides to rescind their offer of coverage, you may not be able to return to your previous carrier at the old rate. Hopefully this gives you some context to the larger question of why rates go up. As always, if you have further questions, please reach out and we would be happy to answer them for you. Thanks for listening, and remember, when it comes to anything related to insurance, please think of First Mark first.